Okay, hello everyone. My name's Dan Stevenson and I work in the marketing department at FXChoice. Welcome and thank you for joining us at our first FXChoice technical analysis webinar with Trevor Neil. We'll aim for the webinar to be approximately 30 minutes, but we may spill over by 10 minutes or so, depending on the questions and depending on how excited Trevor gets about talking about charts. So we'll see about that. Before we start, if you have a slow internet connection, it might be better for you to dial into the webinar. You can find instructions how to do so in the email that you received after registering. And this is very, very good if you have a slow connection. The only downside, I suppose, is that you can't ask questions. So Trevor Neil will be presenting the webinar today. Say hello, Trevor.
Hi, Dan. Hi, everybody.
You can read Trevor's full bio on our website via the link that we sent you in the confirmation email. But just to give you a brief introduction, Trevor has been in this game a long time, starting out in 1974 trading coffee at Merrill Lynch, then going on to become global head of technical analysis at Bloomberg. And nowadays he's passing on his skills via webinars, tutorials, mentoring programs, and I suppose still trading, running your own fund. So before I pass over to Trevor, if you have any questions for him, please use the questions tab on the GoToWebinar gadget window thing. If you go in there, you can ask questions and I'll see those and I'll pass those over to Trevor. Please keep questions on topic, and if we don't get a chance to address all of your questions, please feel free to send them to webinar@myfxchoice.com and we'll pass those on to him. Okay, Trevor, so over to you. What do we have on the agenda for today? Nervous markets, Brexit, my favorite subjects, US economic packages, a new Japanese prime minister.
Indeed, and volatility.
And volatility, oh, of course. Over to you, Trevor.
All right, then. So let me just make sure I'm showing you the right screen. That's that one there I want to show. And let me turn my pointer into a spotlight. So I hope you've got a nice little blob there. So you can see clearly where I'm pointing to. Right, so it's the volatility has perked up in the markets. We had suffered a sort of period of low volatility, but that's not the case now. Markets are very nervous. We've got a lot of things happening in the background, a lot of fundamental things. Also, we're at some pretty important technical levels, which I'm going to be showing you in a moment. So we're in a nervous mood. US economic package. This is the for COVID package, but they're struggling to get that through. We're getting COVID news, which is getting worse, not better. We've got Brexit. We've got today in Parliament today, really a tough day. Also, the EU has also played an ace card after Boris Johnson played his ace card. Now they have too, with the Euroclear, which was intended to stay in London even after Brexit. They say that's not necessarily true. We will have a new Japanese prime minister, but all these things putting together, plus other things, technical things, to give us the volatility, uncertainty, and the nervousness in the market right now. It seems, despite this, we have a risk-on move in the markets. We've got quite a lot of data and announcements this week. Today we've got this vote on Brexit. Tomorrow we've got for the Australian dollar the Royal Bank of Australia meeting minutes. We've got also on Tuesday retail sales in China. Also on Tuesday the unemployment rate in the UK. On Wednesday also for the UK the consumer price index. But also we have got US Fed rate decision, very, very unlikely to change rates, but also comments, that's on Wednesday, and Bank of Japan and Bank of England also, I think on Thursday and Friday for them. But we are pretty certain it's going to be Yoshihide Suga will be the new Japanese Prime Minister. This was an overwhelming vote, it wasn't a close thing, and he is more of the same of Abe's Abenomics, continuing that. But he's got a lot of problems to face. So we've got a lot around imminently, which can cause swings during the week. Now let's start with the euro. This is a daily chart of the euro, and you see that we've been trading in a range, a fairly defined range. We hit the bottom of the range last week. We bounced from it, and so
Trevor,
very
just to
nice.
stop you, I cannot see your nice blob that you had on there. I'm not sure if it's working. We can't see your cursor.
Oh, right. Okay. Well, I don't know what to do then. I'm going to go back. Can you see our cursor now?
Please squiggle it around. No, I'm afraid I can't. We had it working just a minute ago, and I'm not sure what's happened to it.
Yeah, let me try again doing this. Any good?
No,
See
I'm
a
afraid
blob?
not, Trevor. Can't see anything.
You are seeing the daily chart of the euro.
We are Euro USD daily, but for some reason your cursor that you had working before has just disappeared.
Okay, I'm sorry. I don't think I can quickly get that back again.
Please continue. I'm sorry for interrupting.
Now, the last few days we've been bouncing against the dollar. The dollar is weak, so we're mid-range. You can see the RSI has turned up from a reading, a low reading, turned up, gave us a nice message right at this turning point at the low, and we are beginning to look as though we're going to test the top of the range. So the dollar is going to continue to weaken and we'll test the top of the range. Now, this is very important to get this into context because can you see my screen now? Sorry about this.
The Euro US dollar daily we're still looking at, Trevor.
Yeah, and you can see it. Let me just try this cursor thing again. How about now? Is my cursor bobbling about?
I'm so sorry, I cannot see it.
Oh.
Yeah, there it is. I can see it.
All right.
I don't know what you did.
Yeah.
Congratulations.
It was a bit of an accident, but it's there now. So we bounced up. The RSI came up from a low reading, and just giving us a nice, whatever way you use the RSI, giving many technical traders a good buy signal, touching the lower Bollinger Band also. So we're moving up now. The RSI is now just above mid value. It's about 60, and it's moving up, and I think towards the top of the range. So I think we'll be testing the top of this trading, slightly rising channel here. But I want to move to show you a monthly chart. That's probably something that people don't look at too often. Do you see the monthly chart, and do you see my blog? Okay.
Yes,
now,
we do.
What you may see here, or what I hope you'll see here, is that we've got this downtrend line. Now that is a multi-year downtrend line in the euro. It's got two other points off the chart here, but we have approached that level at and it's at 121. So we got a multi-year downtrend line, which is looking like, all this consolidation that we've been having for the last 4 weeks is below that line there. It's a very important level. Also, we know that 121 is a very important level for the ECB itself. And Christine Lagarde has mentioned it, and the bankers have too. Let's go back to the daily chart here now. And so this level up here, which is at the top of our channel, is a very, very important line in the sand for the ECB. Now, they're committed to this level. So we're coming up towards it and to test it. Now, their ability to hold the euro below that level, they want to do that because they don't want it to be too strong. It hurts exports for Germany. They don't want that. So they want to keep a lid on the strong euro. But can they do it? They can't do it if the dollar weakens. They are only in control of 1/2 of that pair. And so I think that this test will be a very important test of that 121 level. Christine Lagarde was a little bit not emphatic about the holding this level. So it's possible that they might let it go, but so far they have acted when they get to that 121 level. That downtrend line over the years has caused the ECB to act. So I wouldn't be surprised if they do act again. It's very important. We're approaching it, so this short-term strength looks as though it will continue, and that will cause a test of it. So expect enormous fireworks if we can break through that 121 level. That will put enormous amount of support below us and really unleash enormous upward movements in the euro and down in the dollar itself. Now look at let's go now to sterling. And now sterling has had a big breakdown, of course, last week. Today, surprisingly, it's a bit steadier, and it's not really steady. It's the dollar that's weak. So we've got this white candle here. We have come down and we're testing the 200-day moving average after breaking out of this channel here and collapsing really quickly towards important support. And this is an important support level, which over the last 2 years, we have built up a support level here. So I think that this support level that we're at, the 200-day moving average, plus the support off to the left here, is going to stifle the fall in sterling, despite the background that's going on here. There's an awful lot of shorts in the market. The marketplace, both commercial and the retail level, are overwhelmingly short sterling. And so they're quite vulnerable to even some slightly good news for cable. So watch out for that. It's a bit of a, seems like a one-way bet to many people, and this leaves them vulnerable. We could go up on some good news. Imagine that actually they are much closer to making a Brexit agreement. After all, there isn't too many points left. They're all digging in about them, but it's possible that we could get a Brexit agreement, and that would be enormously bullish for sterling because people have been so pessimistic about it. The big level, the key level, the important level for sterling is the 133 level. That's way above us right now. But that level turned us down in September 2018, March 2019, December 2019, and again in August. So this is a very important level, 133. And that would be would unleash enormous bullish movement in sterling, which might be triggered by an agreement on Brexit. Although we may never have an agreement on Brexit, and we may have a hard exit, and in which case 133 will never be breached and will just sit there as a enormous resistance level. So I think on the short term, we're heading for some surprising stability in sterling as it meets support, and also some short covering takes place. Now the Japanese yen. So we've got a new prime minister. This has strengthened the yen. Don't forget that this is the dollar versus the yen here, daily chart. So this black candle, the weak candle here, is a picture of the dollar weakness and the strength of the yen itself. So we've moved down, but actually, technically, I'm not sure that this is really that important. We're trading in a range. The Bollinger Bands have narrowed up quite a lot. The RSI, of course, is weakening. But here we've got a clear important support level at 105.25. We've got various resistances. We've got this downtrend line, which is at about 106.25 currently here. So this is a descending triangle shape. The strongest line is the 105.25 side. But I do think that we're probably going to continue to be contained within that range. The 105.25 to around about 106 level will hold us for a bit longer here. That doesn't look like this is coiling up to get ready to make a major break. But we know where the breakout levels are. They are 106.25 and they are 105.25. That is the range. A breakout from that range could cause, big test down to 104.50, big support levels like that. Now let's go to Bitcoin. Now, Bitcoin has been really interesting. Bitcoin, I really love doing technical analysis on Bitcoin because it does it so well. Many people think it's just chaotic and things like that, but it's for a technical analyst, it's a thing of beauty. If this goes into my album of beautiful charts for showing when I'm teaching people technical analysis, a head and shoulders top, nice climb in here at the end of July, high, pull back, higher high, pull back, lower high, hit, left shoulder, head, right shoulder, neckline. People do it in two different ways, but either way, it was definitely broken on that candle there. It was an emphatic break, a long candle closing a weekly black candle there, and we dumped to exactly the minimum price objective. I can't believe it. I had drawn this red line in for the minimal price objective when that break took place, and there we went, touched it actually on 5 times, every time rejecting it, indicating that we were likely to hold. This was all occurring around the $10,000 number, $10,000, a big round number. So there was very good technical reasons why if it was going to stop, it would be here. It had reached its objective. We got lower shadows there. It didn't really want to go down, and it was occurring at the $10,000 level, which was also the high of the trading around April and May, and then in February. So that had been resistance then, twice significant resistance, so now becomes significant support. So good reasons for it to hold here, and I'm not surprised to see what's happening today, that it's starting to bounce. But unfortunately, the upside is quite limited for this because it can go up to say 11,200 here, but then it meets this big area of resistance here. We traded there for 4 weeks in that zone between 1120 up to 11,200 up to 12,200. So I would be very surprised if it went quickly through there. There are too many distressed longs in that area there who will want to liquidate. So my thinking is that we're going to continue to steady up for the rest of the week, but then stall at around 11,200. Now we're finished with the currencies for the moment. Do we have any questions?
None so far, Trevor. We've got about 12 minutes left as well. All
right. Okay. I will speed up. Right. Next, we're going to look at the US 500. And for once, there's not too much to say about that. We had the big savage sell-off, which was well overdue. And in retrospect, it was really quite a mild sell-off. It was a 3-day event. We have retraced to just below the February high, which is support. So this level here, if we go back across here, is the February high. It was a resistance level, powerful resistance level. It caused the March. It was the trigger for the March sell-off. We now moved slightly above it with a gap. So we had a gap, which was also unusually a weekly gap as well. And now we're trading just around that level and seem to be gaining our footing. And the moving averages are still splayed out, fanned out in a bullish way. The 20-day, the 50-day, the 200-day are fanned out in a bullish construction. The RSI is starting to come up here The MACD on the weekly chart, which I also look at, is still positive and wide. I think that this market is at the first opportunity is recovering and is getting ready to make another charge towards the high again. And if it's going to do it, it's a good place to do it from the old February high. This will all be negated if we take out the lows here at 3,290, that area there. Then we're going to head lower again. The next level would be 3,200 if we do break that level. But the indicators are that this consolidation is going to be resolved to the upside.
I have a question, Trevor.
Sure.
And I've got a sneaky suspicion you're about to answer it anyway. What is your views on the gold chart? Asks Protus. Thank you very much for your question.
Yeah, thank you very much for your question. But funny you should ask that. So the next one I'm going to do gold and also crude oil, just to let you know that what I'm intending to cover today. Now, gold is very interesting chart. Let me look at, first of all, show you gold on a weekly chart. So here it is on a weekly chart. Of course, we've had this lovely run up here. These Fibonacci extension here, I measured from here to here to here and then extended up. We're through the 161.8 and we're trading above it. 200% is right up there. But more important, it's a $2,000 level. No surprise that this level, we should pause at that level. And we're pausing, unfortunately, a little bit below it. I'd rather we were pausing above it. That would be more constructive, but we are pausing below it. And we're forming this symmetrical triangle. So I've drawn the down line and the up line there. It's symmetrical. Symmetrical, that means the bulls and the bears are equally strong in this pattern. It is occurring just below the $2,000 level. The 50 and the 200-day moving averages are nice and strong. The MACD on the weekly is come back to nearly crossing. But I do think that what we are seeing here is a intermediate and long-term uptrend, which we see from the moving averages, and also from this now the MAC, the RSI on gold turning up again on the weekly chart. Now let's go now to the daily chart. Shouldn't I put that on?
No, that's Skype.
Yeah, it isn't now, is it? So now here is that triangle I was drawing. Notice the narrowing up, the pinching of the Bollinger Bands. And as we approach the apex of the wedge or symmetrical triangle, this is telling us we're about to make a significant move up or down. So we move out of that triangle, either breaking down or moving up out of it. But and the pinching of the Bollinger Bands, this severe drop, sudden drop of volatility causing that is indicating that a breakout is imminent. Now, is it going to be up or is it going to be down? I think that the RSI, both on the weekly and on the daily, is still positive. We're coming up in a pattern here, so we're sort of meeting some accumulation at this point. Also marginally in this sort of chart construction where you've got a pausing pattern inside an intermediate and long-term trend. Generally, this is not a top, this is a continuation, a pause and a continuation. So I would say 60-40, this is most likely to break to the upside. And also, I do think that we're going to have a big break too. So I think, I'm not so sure whether it's the upside or downside, but I do lean towards the upside. But the height of this triangle here is very large. It's from 1860 up to 2050. So that's $200, $210. And so if we get a breakout, we should move the height of the triangle, and so that would indicate the breakout would take us, swing us right through the highs and into new highs. So this is a pretty exciting chart, and does look as though we are very close to making a substantial move. So if you see the break, I would suggest you follow it, because the prize here could be really substantial. We know that gold can go $200 quickly, easily. It does it in times like this, and this is an unusual time, this consolidation, and it looks as though it's ready to finish. The resistances are $2,000. I don't think it's going to pose big resistance. The high here at 2072, I think it was the high here. Neither of those, I think, will pose significant resistance if it's got the power behind it I expect to see developing. And that's quite a big call when the market is trading so narrowly and quietly as it is today. Okay, so I hope that answers the question for the person that asked there. And I'm going to end with crude oil, because also I expect something similar, but in reverse, to happen in crude oil. So let me flick again to the weekly chart just to get the context here. So here we bounced out of the terrible situation that we had with negative on the prices on the spot month, V-shaped out of that, filling the gap that had been left on the way down, but now sagging over, really looking very, very tired on the upside. The RSI has come down, it's at 39 now, and the MACD is still positive, but moving close towards crossing over on a weekly basis. So this is the 12, 26, and 9, a weekly MACD. Another week down, and I think that will be crossing over. But let's move now across back to the daily chart. And here we have it. So here is this sagging, slowing, losing momentum, rise in the market. Then I drew this channel in here. Then we had the narrowing up, the pinching of the Bollinger Bands here, which was our warning. We did see it. We did note that the move should happen soon, either up or down. It was a break to the downside. And then we quickly went through the minimum price objective. And then for the last 1, 2, 3, 4 days, including today, the market has been consolidating and narrowing up. I've drawn that pennant with dashed lines because it's not properly drawn with the number of points on it that I would like. But I think you get the point, is that it's pausing, it's getting ready to make another move. This is going to be probably tomorrow or the next day that it's going to occur. We're on the daily chart basis, we're in a downtrend. This is the ADX, the average direction index here. This is moving up strongly. This means that the trend is strengthening. The trend is downwards and it's strengthening. So I think that this is going to break to the downside, and we will probably leg lower, quite quickly lower, towards support. So I don't think the support is actually that heavy. The support here at 34.25, but I don't think that is really that heavy. We watch out for a break of this level, because that could trigger really a tumble after that. If we were to break that 34.25 level, or even the 36 level, would be pretty disruptive, because I don't think the 34.25 is that strong a support level. More important is breaking the $36. Then I think, honestly, I think that we could be trading back around the $20 level quite quickly after that. Certainly 30, because that would be matching this leg added to that level, would take us down close to 30 or 31. But I think there's so little support in this that it could sell off quite hard. Of course, I'm talking a long way ahead. A lot of things can happen in the meantime, but I think that the trend is starting to establish on the downside. We've got a little pause. I think it's going to break to the downside, and then leg lower, and then even maybe lower than that. All that is negated if we break up through $39. Then what I've just said is clearly not true. But we're only at 37, and we're talking about going to 30 or even 20. So that's a good proposition, I would say. for a short trade. All right. Do we have another question?
We don't, Trevor. No, and you've miraculously managed to make that exactly 30 minutes. Congratulations.
Well, I gotta say, Dan, timing is a specialty.
Thank you very much, Trevor. Well, thank you very much, everyone, for attending. That's it for this week. But you can join us at the same time, same place next week. And if we could just ask you to take a moment to fill in the survey at the end of the webinar, let us know what you thought. Tell us everything, what you think. How was it long enough? Was the information useful for you? And all of this helps us improve the webinar, so we can, we do this for you guys. So yeah, give us as much feedback as you can. Okay, thank you very much, Trevor. I will speak to you next week.
Yes, indeed. Thank you very much, Dan. And next week it's from the beach, as you know.
Yeah. Yes, of course, of course. We'll speak about it then.
Yes. And thank you very much indeed, everybody, for joining us for the first time. I hope, as Dan said, please answer give us suggestions, help, ideas, too long, too short, too technical, not technical enough, just help me make it better. It's very important to me that it helps you. This is a benefit to you. Thank you very much indeed. Have a great week. May the trend be with you, and I'll speak to you next Monday.
Excellent. Bye-bye.
Bye-bye. Bye-bye, everybody. Bye-bye, Dan.